Around January, Wall Street investors began to short sell GameStop shares as they did not believe in the company's new business model and were predicting the share price would fall. The plan is to buy the shares back later at a lower price. However, in this instance, Redditors created a problem for the hedge funds. Before the hedge funds could buy the shares back for cheaper, Redditors ensured the price had gone up instead. One of their tactics is to buy lots of very cheap short maturity out of the money options on GameStop shares, doubling the option market open interest. The delta values of the options relates to the amount of shares the option market makers need to buy to neutralize their risk exposure. This option trading is combined with an organized effort to increase GameStop share price by a sheer volume of Redditors buying activities. When the share price increases, the out-of-the-money options becomes at-the-money, and delta increases at the higher speed as at-the-money gamma peaked, forcing the option market makers to buy even more shares in response. This strategy of exploiting the gamma property is called a gamma squeeze. As the share price increases, more and more out-of-the-money options becomes at-the-money, generating even more buying pressure on GameStop shares. By now, the hedge funds started to have to meet margin calls, making up losses on the short position. When the vicious circles continues, some funds started to have to cut the losses, buy back the shares at a very high price, losing almost $3 billion in a few days. This is a very smart strategy pulled off by a bunch of regular people indeed.